All right, and with that, let's look at the time, 4:20. Great. So I need a volunteer. Say yes. What we're gonna do here is we're gonna go into a bias exercise. And based on this bias exercise, we'll be thinking and talking about synchronicity. And we'll be kind of like trying to figure out how we could use this concept in our bias definition. All right, a volunteer? All right. Simon, I'm glad that you're volunteering on the day when you can make the class.
Roman.
Yes, I can hear you now.
Great.
How are you doing?
I'm well, thank you. And how are you?
Yeah, good, good, good. All right, so we'll kind of keep the synchronicity as an idea at the back of our minds. Um, but here, okay, so here's our chart, obviously an IPO. Um, what do you see in general? Like when you look at the chart, what is the general sense that you get? Maybe something that catches uh, your mind right away and you start thinking about specific bias.
I sort of see a lot of volatility, specifically with a lot of supply coming in. You see in May a big gap down,
Mhm.
and then the sort of volatility sort of goes away from about June onwards.
Yes, and that's my observation as well. So I'm looking into like two periods on this chart. I'm looking into period number one and then period number two. It just has different textures. And I think that you could see that not necessarily just in the price spread itself, right? Because we definitely could say, okay, look at the down spread here, 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 here. Even in the uptrend, you have those big volatility spikes, big spreads, and obviously all of it here to the downside with the huge gap. And then going into the second uh, texture, what do we have here? Probably with an exception of this bar, there is really nothing else. Maybe this, but I wouldn't even pay attention to this. This, there is really nothing else. So I would totally agree with Simon that volatility is kind of like vanished, and that's great. That just gives us what kind of bias in general, Simon.
Initial thoughts is it's biased to the downside, only based on that first period, that first section which you've identified.
Okay, but usually wouldn't the decrease of volatility be associated with bullish bias?
Yes, but what I'm not seeing there is that it's, oh no, it is making higher lows and higher highs.
Well, I just kind of like as an idea, guys, volatility as a term always been associated with the moves to the downside. We kind of expand this definition a little bit and we're saying that even the bars to the upside, like this is a lot of volatility to the upside. This is a lot of volatility to the upside. So when we talk about diminished volatility, we usually would be talking about the areas where selling is subsiding. There is not a lot of selling, and therefore, with no selling, we would be expecting a bullish bias. So that's what I was kind of like thinking, Simon, when you said diminished volatility. So instantly, my thought was that you're thinking about the bullish bias. Okay, so if we're thinking about the bearish bias, then what are the main tenets here for the case of the distribution?
So if I was looking for characteristics of distribution, I would be looking at selling at the top of a trading range.
Okay,
So it's
right
an
here.
increase in volume. Yeah, but I don't see an increase in volume there. So I would have reservations as to whether or not it was distribution, but then that big gap down
Uh-huh.
sort of makes me sort of not be so sure in terms of my initial thoughts.
Hmm. Okay. I think you're on the right track here. So again, I do not see this as a big mistake to have a different bias at the beginning of the trading range when you start analyzing it. I think what needs to happen, like in the bias game, you should have the capacity to see the change and then to be able to change that bias as the price, goes through a specific change. So we have identified a couple of changes here, right? So we've identified probably this reaction as the main element of change. We said that on both sides, there is such an increase of volatility to the downside where there is a gap, where there is, increased in the volume signature. This is the highest volume signature since, the first two initial days of the IPO. So there is a tremendous volatility right there. Um, but at the same time, and I think Simon mentioned this, a higher low, that's very unusual because the effort has increased so much. So on the increased effort, we're making a higher low. That just tells us that the result to the downside is diminishing, and we could expect some kind of rally out of this. A trading range goes through the shorter period of absorption, and then here we are. We have this rally. So Simon, coming back to this reaction, this higher low um, that suggests the rally, but could it also suggest that the bias, might be different?
Yeah, I guess one thing that I sort of don't have clear in my mind is what the thought process is when first looking at a chart and trying to understand which bias it is, either up or down.
Well, I would go one, structure by structure, so element by element. Element number one, element number two, element number three, element number four, 5, 6, 7, 8, 9, and then 10. And then Wyckoff's story would be created through all of these elements, right? So let's just go through this really quickly. Element number one, a very bullish IPO bar that suggests the bias is to the upside, but it also suggests element of the supply. So we need to see what's going to come next as a test. The test comes, and in 2 or 3 days, we see that supply is still very strong. So that suggests that there's some selling. At least at the minimum, we could go into the trading range. As we go through the trading range, second point of excitement right here, sign of weakness, LPSY, a downtrend. So bias now is to the downside for sure. Element number four, accumulation, very short accumulation. So we're not expecting a prolonged trend here. Our target is here. As we come there, there's another element here with another sign of weakness, and then a drop to the downside into the higher low at 7. So as we said, bullish result, we're anticipating some kind of bullish absorption. It happens. Element number 9, a rally, and then what happens? What's the story there? Um, I just went through all of this, and then what's the conclusion, Simon?
So just a couple of questions then. So in the section 2, would that be regarded as a upside bias still because we're making higher lows and higher highs?
We would be thinking that we're still in the upward bias until we see um, let's say, this supply coming in, and then we would be saying at this point the character is suggesting maybe a bearish scenario, but we need
Mhm.
to see some kind of confirmation of that. What would be a confirmation? For instance, another attempt to go up and then a failure. So a sign
Yep.
of weakness here acts as that confirmation. So throughout, we're still going to be having, let's say, a bias to the upside to be confirmed or to fail. And then let's say on this bar right here, we would be saying that this bar confirms that the up bias is down, has failed, and now the bias is to the downside, as well as the
Mhm.
bar like this would also act as a confirmation.
Yep. And then does it revert back up to the upside after it leaves the area 4, where we start to then make the high lows and high highs again?
So how does the change happens here? Okay, so first we observe this selling climax, automatic rally that have a change of characteristics, and we're thinking, okay, the bias could change here. So to confirm or to fail, we're going down, not committing to the downside that much. That's a confirmation of the up bias. We are rallying with more momentum again, and then we are reacting just shortly. So that confirms again the bullish bias, and then here our final confirmation on the breakout. So that would become an up bias. But you are defining the bias based on the swings reversals. You're not defining the bias for the whole formation. When you're thinking about the whole formation, the first question that I've asked was the correct question, because you're looking at the whole formation and you just want to basically figure out, is there more selling that's happening, or there is no selling? And that's basically what we want to kind of gauge from the first look. And it feels to me that, that's why we have these two textures here. One has more volatility, one has less volatility. Therefore, one has more selling, one has less selling. If we're going from the environment where we have more selling into the environment where we have less selling, the question is, who's holding the supply from that selling? And then, was it enough? Was it sufficient to absorb the initial supply? And is this low volatility area shows us that now's the time? So those are the kind of like the questions that I would have there. Okay, well, how would we interpret, let's say, let's approach this from a different angle, Simon. How about this? I want you to analyze just this portion right here, and don't look at what has happened before at all. Don't even think about this. Think that this is the IPO price right here. How would you analyze this chart?
I would see the down move down to that last bar as the selling climax.
Okay.
So there'll be a trading range which is formed, and then there'll be the automatic rally, and then the secondary test.
And probably maybe even something like this, we see that swing. So this could be a secondary test right here. This could be the conclusion of phase A. The trading range is small, so phases come really fast. Okay. Up thrust. Okay. And then where do you think phase C is?
Probably about the between the 20th and 27th of June.
Yeah, so somewhere there. So this as a spring
Yep. And then
with
you have a side of strength
a
bar,
test.
which then gets tested.
And a test. So therefore, probably this is our phase C, was the first test. Okay, everything in between is B. And then phase D, where is our phase D?
It would just be after the breakout.
Okay, so sign of strength, backing up action, phase D. Okay, and then we go into another formation. would you say that just kind of like looking at this too, could it be that this was like a minor sign of strength and this could be a major?
Um,
Just one formation
yeah,
on another. I mean, you have to
yeah.
entertain this thought. Why? Because you have, what bias do you have here in the original formation? You have a bias of the accumulation, right?
Yes.
So when we are doing something like this, jumping out, our first thought is going to be, could we have a much major sign of strength? We definitely see a lot of supply here that comes in that suggests that we're going to go into a trading range. We define the trading range by the boundary of the change of character. Here it is. So now we have to look through this range. So let's look through this range, Simon. What do you see? Do we have distributional characteristics in this range?
Well, usually my guideline is for distribution characteristics is sort of any price which is around the top of the trading range, which has increased volume. And I sort of see that in the doji bar up the top of the trading range at about, is it the 22nd? Yeah, so I see that there's a big volume spike there. So there's some sort of opposing force that's stopping the price from moving upwards. And that's the supply, and that's probably natural because that's, I guess, a natural supply zone based on that first big up bar in that big momentum move.
Mhm, mhm. And what does the supply, you know, do here? We're seeing that supply is actually diminishing, right? So
Yeah.
around the resistance. So we went to this zone to 12 and a half, or what is it, 12.25, and we even counted supply. There was a lot of supply. What kind of
Mhm.
effect did it produce relative to the previous rally into this supply?
Not a large effect, I don't think, because if you have a look after that big supply that comes in at about the 22nd, um, price doesn't fall immediately, it sort of falls slowly, and then it sort of only takes out, I guess, the last commitment to the upside in about the 12th of September with that significant down bar.
Mhm. Well, think about what happens here with these two bars, right? So they are analog bars. They happen at the same contextual place at the point of the resistance. They have the same intention behind it. Commit above 1225, both fail. Uh, and also the volume spike increase similar in the volume signature itself. But what's interesting is that the first bar, when supply increases, has the result like this. The second bar, when supply increases, has a result like this. So which bar has better absorption of the supply?
The second bar.
The second bar, exactly. We are at the same price level and supply is coming in. I mean, okay, there could be an argument it's smaller supply, but at the same time, this is the bar number 3 on this chart. So there is a lot of supply that's coming in right there. And yet, absorption happens like this. So in it by itself, this action where absorption happens at the same price level and that doesn't move the price, is bullish in this regard. But because there is a lot of supply that's coming in, we're still expecting the reaction. What kind of reaction do we have? Does it increase in the result?
No.
Does it have selling towards the end of this reaction?
Yes, it does.
Does it increase or decrease?
It decreases.
Does it produce the intention of committing below the support?
No.
What about the next reaction after that? This one right here. Does this
I think
selling increase or decrease?
the selling decreases
Does it
predominantly due.
produce the same an increasing downward result.
No, it doesn't. I see that the volatility or the price spread to the downside is a lot narrower than the previous reaction.
If I would be asking you, Simon, where is this selling has happened in this latest trading range?
Mm-hmm.
I would probably just hear from you these two bars. But there's really nothing else. And then, as you
Yep.
said, volatility is really low. Volatility is really low. So when we look into this area, then we're looking into the accumulation, and then we're looking into probably reaccumulation right here. So we're expecting some kind of continuation. There is really nothing else in this area that we could see. Whatever supply comes in, it's all being observed. So that's why there is such a big difference between these two areas, where in the first area there is so much volatility, and then in the second one there is kind of like a very controlled move to the upside. Whatever supply comes in does not produce a big reaction. Whatever comes in, a supply comes in after that, absorption happens at the higher level. So with that, I think it would be kind of like on the very big level to think that this is an accumulation just because of how volatility has been diminished to this point, and then go to the structural analysis and just think where we are. What do you think? Where do you think in the structure we are here?
Maybe entering phase C.
Yes, BB, possible phase C. So we would be looking for maybe some kind of bar that would reverse. That would be our point of entry. We could also enter as the price goes through the high of the last bar to the downside. We could do that. Let's look at the result. Okay, so that was square, and we were right here. So here is that bar that reverses, and then that would be our point of entry. Our next point of entry will be, Simon, where?
On the sign of strength bar in about November.
Here you go. Could we buy on the next bar?
Yeah.
We can. So the problem here is going to be that, we can't really use the stop loss like this, but it's still a sign of strength bar. Momentum is diminishing, so we kind of know that we're going to hit the resistance and going to have that reaction. So our stop loss is probably going to be still low. But here's our first point of entry. Here is our second point of entry. Where is the next point of entry?
After the backing up action.
Which is where?
14th of November.
14th of November. This one right here?
The one before it.
The one before it. Okay. Where is the next one?
Potentially, was it 1, 2, 3 bars later, that little sort of hammer candle?
Okay, this one right here, or this one right here?
Yeah, that one, yeah.
Okay.
With the little demand
yeah,
tail.
I probably would be thinking maybe this one right here, but most definitely this, the breakout. Breakout again. Then what is the next one? What do you think?
Would it be the next sign of strength bar? Which is 1, 2, 3, 4.
This one right here?
Yeah.
Well, think about where we want to open our positions, right? So we want to open our positions as the trend emerges. In our cases here, as the swing emerges, right? So we're probably going to be talking about anything before sign of strength backing up action. So I think that we've kind of concluded our entering the position right here. Most likely it's going to be in the next place where it's going to be more or less oversold. So probably somewhere here. We could also consider it here with an idea that this could be the lowest low in the potential reaccumulation that still will touch the support line right here. So here and here, something like this. The same idea here, but at least we know that the buying climax has happened and we had a consolidation, so maybe like a breakout right here. So we basically want to enter the position closer to the area of the short-term oversold condition. And we'll talk about this in December when we will discuss long-term campaigns and how to swing trade them. So, that will be kind of like one of the main discussion points for us. All right, Simon, so what else could we discuss here on the bias that could help us to define the bias quicker and better?
I guess initially the things that I look for is lower highs and lower lows, and that would sort of define the up bias.
Okay. Yeah, that definitely would help, right? So if we would be defining higher highs as, let's say, one formation over another, then this would be a higher high. This would be a higher low already. So you would have that sequence. So right here, you would be looking for a position because you would be thinking that you could be in potential uptrend.
Yep.
Okay. All right, Simon. Well, thank you.
Thank you, Roman.
Great. Let's talk about synchronicity. Same concept, same kind of chart, same type of exercise, and we are talking about the same concepts. We want to find first a stop in demand, in the when we have the price going to the downside. We've talked about synchronicity from the opposite side, on the distributional side. Now let's talk about the uh, demand rather than the supply. How would demand absorb the supply? So as we could see, the stop in demand would always come in the area of the climactic action, or in the reaccumulation, it will come at the low of the automatic reaction. Why is that? Well, because a change of character is going to produce an increase of the supply, and that increase of the supply will need it to be absorbed by that demand. And that's why demand has to increase its present at that point of time. And that's what stops the first change of character. In the accumulation, we're just going to have a regular selling climax where demand comes in, and that stops the price from moving further down, and that produces also a rally that has some short covering behind it in the background, and that just exhausts both supply and demand. Both energies are increasing and colliding with each other, and that produces this big volatility. After that, there's going to be an exhaustion between demand and supply. Both are going to be exhausted, and their signatures will go down. Then demand is going to win in the accumulation, and this is where we're going to observe the increase of the demand and increase in the result as well. Once that is done, the price could travel up on lower demand signature that would identify an ease of movement. This process will repeat itself over and over. Selling climax with emergent demand, exhaustion of the demand and of the supply into phase B, emergence of the demand, this is not that visible here, but emergence of the demand off the lows in phase C, and then ease of movement either in D or out. Reaccumulation is going to be slightly different. Demand is going to come in on the first initial rotation in phase A. This is where the profit taking is taking place. But we could have a rotational reaccumulation, right? So this is where shares from one hand's strong hands could come to other strong hands, and in both cases would be institutions. They need the liquidity, so phase A provides that liquidity for them, and that's why institutions are not really going away from phase A when they're buying into the position. If their future valuation is somewhere up there, then it doesn't really matter whether they are buying in phase A or whether they are buying in phase D. The time factor for them is less important than, let's say, for the retail traders. Liquidity is more important, so they're going to buy at the point where liquidity is the highest. So therefore, increase in the demand. On the second reaction, we're going to have the exhaustion of both supply and the demand, so the reaction and the rally are not going to be that great. And then off the lows in phase C, we're going to have demand coming in and producing some result. And after that, on the diminishing demand signature, we're going to see how the price starts to move up. Ease of movement. That's going to repeat again. Change of character, demand comes in, produces the rally. Phase B, no demand, no supply. Phase C, demand signature increases, and then an ease of movement after that. Again, change of character, demand comes in. It looks like supply, but there is a demand that is hidden there. We know it, we see it. And then after that, we see the exhaustion of the demand and the supply. Demand produces a result, and then ease of movement as the price goes in low volume and leaves the trading range. That's the concept of change, and that's the concept of how synchronicity is being reached. And we definitely want to use these elements and to identify those points where we start seeing synchronicity of effort versus result. So everything in green, this is going to be our first points of where we would be thinking and considering opening our positions from the perspective of timing. So we would be thinking about that. All right. I've read somewhere before that for the market to go up or down, we need effort or volume. Would this be an oversimplified explanation that it's more complex than that statement? Yeah, so we need the volume signature that basically tells us that there are more market participants and they are either buying or selling. There are moments in the marketplace when there are no buyers, no sellers, volume is low. A really good day like that was yesterday in the markets when we have a federal holiday in the US, and then we also in the market we're kind of like very in anticipation waiting for the news on tariffs. So those type of days are going to be low volatility days, and they're going to represent that phase B type of demand and supply both are not there. And then there's going to be days like this where synchronicity is going to be there. We want to recognize those and we want to open or to add on those days. And you can go through the trading range with this traffic light and try to define where exactly that synchronicity takes place, where exactly the timing becomes more apparent, and especially in the swing analysis. And you can use this for the bar to bar, you can use this for swing to swing, and you can use this for phase analysis. There are multiple uses of this tool. So hopefully that's helpful. All right, 5 o'clock. That's great. We have 30 minutes. Let's jump into our action sequence. Let me know who wants to volunteer, and we'll do this together. And meanwhile, I'm just going to go through this really quick so that you would remember where we are. We started with the stock that also was an IPO stock. Very aggressive initial buys that we see off the bat. No sell-in, and then they're still buying on the way up. Once they bought on those two waves, they're not buying, and that leads to a more meaningful trading range. We saw this as a change of character, and we said that, okay, well, maybe this is where we are in this range, and this is where the price is going to be for the time being. Also, the latest gap right here on the increased volume signature suggested that we're going to stay here or even have, maybe like some kind of reaction. We had that reaction, and I don't know if I remember correctly. I'm not sure if we've talked about this. This decline had that low volatility signature, and usually we would say that this is a very bullish sign. This means that there is no selling, and with this type of movement, the timing of the end of this move is usually going to be an increase in the volume signature, because this increase in the volume signature would identify to us emergence of the demand, and it happens somewhere here. So basically on this bar right here, you're just saying, okay, well, now demand is there. We just need to define, that reversal bar, which comes right here. So here's our reversal significant bar. Please note, Stephen, on the definition of this bar, what is this? This is a commitment to the upside above actually multiple closes, most recent closes that we had to the downside. And that commitment shows the commitment of strong hands to the upside, at least at this point of time. The significant bar should be an expanding bar. The close should be above 1/2 of the spread for the bullish up bar. And we want to see that significant bar committing above the level of the resistance that was defined by the opposite force. So from here, we're expecting some kind of rally where to probably into this area right here. And it seems like every time we have some kind of supply characteristics, we go into new high, we have that supply characteristic. And we said, last time that this was very interesting. Supply is going lower, and we have better closes, we have better absorption. We just kind of repeated that concept, right? Look at the absorption here and look at the absorption here. So different type of absorption. So this one suggests that maybe that's going to be a continuation, and our target is going to be somewhere here. So if we're in the trade, that's how we are trading it. All right, and this is where we are. This was the last chart. So volunteer, and we'll go from there. We have 30 minutes, so that's great. All right. Ooh, we have 2 volunteers, so we'll go. Actually, let me not mispronounce this. Thebot. How do I pronounce your name? I'm sorry if I'm mispronouncing it.
Hi, Thibaut, can you hear me?
Thibaut, yeah, okay, great. Yes, I can.
Yes.
Okay,
Hi.
how are you doing today?
Good, how are you?
Good, good. All right, so this is where we've ended last time. And Thibaut, let me just ask you this question. This last reaction, what does it remind you of? Is there something specific about this reaction that tells us something about, let's say, the rally that we are in?
Yes, there is a change of character.
Okay, great. Yeah. And why is this a change of character?
Well, we had a big up move from April to October to
Okay.
late September.
Yes, great. And then why is this a change of character? Yeah, so we have that rally. What does it tell? What
Why the
tells us
change
that
of
this is a change of
character?
character?
Well, just looking at the bar, but the volume is not showing any supply.
Okay, interesting. So those are kind of contradicting ideas, right? So we need to maybe slow down here and think about this for a second. So we're saying a change of character. Why? Because the down spread bars are increasing. Also, Thibaut, what about the length of this reaction just by itself? So it's like $22, $22.50. Before that, what kind of reactions do we have? So obviously all of
Yes,
those reactions.
the spread is much wider. Mm-hmm.
Yeah, the spread is wider, the downswing is bigger in distance, and then we have, you said that we have some kind of increase of the supply, but it's not really a distributional increase of the supply. We probably just having some kind of profit taken at this point. So what could we expect with this change of character, Thibaut?
A resume of the trend.
Yeah, a
Like
resumption.
it could be like an automatic reaction if we go to a phase.
Okay, yeah, so this would mean that the highest point here is probably buying climax, right? So we might be going into a trading range. That's idea number one. We might be going to some kind of reaction, but that reaction by the, judging by the volume signature is probably going to have some bullish characteristics. So we need to see if this whole scenario, the reaction that we're going to have, or the trading range that we're going to have is going to have some kind of either reaccumulation for the trading range or bullish characteristics for the reaction. Okay, well, let's see what comes next. So here is our reaction. So Thibaut, what do you think now? Is this, we said that two scenarios, either a trading range, and then we have to look for, obviously some bullish characteristics, or we're going to have some kind of reaction, okay, reaccumulation characteristics. And this reaction, for us to stay bullish, should have some kind of bullish characteristics. So obviously not number one, we are not in the trading range. So let's answer this second question. Is this reaction does this reaction have bullish characteristics or bearish characteristics?
Oh, that's bearish.
Okay, so let's show that bearishness. So where do we see that bearishness?
Well, there is I would say like automatic reaction, like early October.
Okay.
But it fell right in like 65.
Right. So there is some kind
And
of
then
this hypodermic almost action, right? Speculation on the way up, and then urgent distribution on the way down. Urgent selling on way down. Okay. So you said something about the automatic reaction. Okay, what about it?
Well, it fell, like it resumed, and then we have a bit spread down. So that's showing continuation.
And I probably, like, how would you even like label this? What do you think?
Well, from the top, we have like 2 lower low. So the first one would be like a secondary test. And the third one, like in early November, will be last point of supply, or?
Mm-hmm. Yeah. Well, because this is a hypodermic, then our phases are going to collapse, right? So they're going to be extremely short. So you could do something like this is phase C, this is phase A, this is phase B. Major sign of weakness, LPSY, and then a downtrend. You could also have it in a different way. You could have a structure here, and you can say this looks climactic, this looks like a buy and climax signature, and then change of character, secondary test, and then phase C has kind of like this more prolonged phase, and then sign of weakness into this, and then LPSY, and then a downtrend. So this probably would be even more preferred labeling. You can do either, but okay, so we were talking about different distribution characteristics. So I see the distribution characteristics here. I see the distributional characteristics on the increase of the supply on the reaction. I see distributional characteristics on the institutional capitulation right here. What happens after that?
The spread is diminishing,
Okay.
but there's still supply available.
Okay. Relative to
until
supply that we have had, let's say here, what is this supply doing? Maybe slightly lower.
It's slightly lower, yeah.
Okay, so not as much selling producing kind of like this laborious move to the downside where the spread is just diminishing. I mean, like compare the spread in this area to this and this. This is just such a big difference. What does this remind you of? Does this remind you of maybe like this action right here?
Yes, it's similar, and it could be like a stopping action from where it started. Like if you draw like a horizontal line, that's basically where we have the gap up.
Yeah, look at that zone where that happens. It's almost like it's interesting. Where is our supply and high volatility, and in which price, at which price level? So somewhere here, I'm just quickly trying to figure out where we have those big spikes of selling, and we kind of see that it's this zone right here. But it's not like the price cannot stay there. It actually spends a lot of time in that zone. It actually spends more time in that zone than, let's say, below it or below it. And whenever it's below, it seems like the selling is just like not there. So
could it be part of a larger structure where this would be the value zone?
Yeah.
And we have to wait to see the phases develop?
Yeah. So we kind of seen there that the selling was at this level, then the selling became at higher level, and it's just that the price just dipped down into the value zone where there were a lot of buys before. We don't see a lot of selling, so this looks bullish at the end of this reaction, and maybe would suggest that we could potentially have some kind of another rally here, just based on the analog and based on the supply signature. Okay, well, I wonder what kind of confirmation of the rally we should have. We should probably have something like this, right? Where we either have a trading range or we have some kind of, a series of tests. So let's see what comes next. By the way, would we be buyers here?
Yes.
Okay.
But I would wait to develop because it could go further down. Let's wait for a test.
Okay, so let's just ask the whole class. What do you guys think? Would we be buyers here? I mean, do we have the, we've talked about the bias, the short-term bias, we see the deterioration of selling. So we're assuming that we're going to have a rally here. But would we be buying now? Would we be waiting for the trading range to unfold? No, wait for the short cover and test of the low first. Wait for the test. Volume looks still high now. Okay, so what volume are we talking about? So we're talking probably about the selling volume, right? So here is 1, here is 2, here is 3. So we kind of see that the supply definitely diminishes. We see that probably this is a relatively easy pickup for us here. We're just thinking that we're probably experiencing this return to value. Where is the value for them? I think that here, this area right here, where they some additional institutions came in into this position and established a new position. Then again, somewhere here in this area, especially as it jumps out, and then again here. So throughout this whole level, we see elements of big high volume signature that suggest a lot of presence of institutions. So it seems that the value, the fair value for them is somewhere here around 50 bucks. So from here, probably we're going to have a rally right into this zone. And then we're going to have maybe like a small consolidation right there. So we could build some kind of trade around here. There is definitely demand that is coming in. And then look at how now demand is moving freely, right? So we have that synchronicity now where there is almost like an ease of movement. Okay, well, let's see what happens next. Let me see some other comments.
I mean, right now we at the edge. I will be. I mean, you're mentioning you would just go in. I would be hesitant.
No.
I mean, we can see volume is the go ahead.
Go ahead.
Yeah, the volume is starting showing up like an ease of movement. Would it be better just to wait for retest and see higher volume kicking in?
Yes, absolutely. Yes, that would be the next test, right? So the next test would be a bar like this, and then we would be coming in on the bar like this. The next test would be a high low, and then the resumption. So we would be coming in here, and we would be coming in here. What's the logic here of me saying that we're probably going to go into 50? It happened before multiple times on this chart. So look at this. We're thinking that the value is somewhere here, right, around $50. Then what happens next? So we're deviating above that value. And if we know that the value is, let's say, at $50, we know that there's going to be at some point a mean reversion trade. And usually when there is, a good profit built into that, that's when it's going to happen. And we know that we want to observe the bar that's going to have an increase volume characteristic and then increase price characteristic. So these two bars right here would identify for us that that mean reversion trade to $50 is probably taking place. The same happens here, right? So we're seeing how there is no momentum here. There is no momentum here. There is no momentum here. And there is a vanishing momentum here. And it's all around the same, price, where we have the momentum going into the values, into the fair value, and then we have the momentum diminishing. And the same, to the downside, the same to the upside, the same to the upside. So I'm thinking about that type of trade where we're trading into the fair value into about 50 bucks. And then hopefully that momentum is going to carry us over. We just have to make a judgment what kind of momentum we're going to see here. All right, so let's, that's why I'm saying that maybe out of this oversold condition, we could get in right away, but we also could wait. We could wait for more definitive characteristics here. Let's see what comes next. Okay, so here is that one big bar, another big bar. We're kind of jumping into that value zone, still not at 50, but close. And then look at this test.
Mhm.
So that's great. We're thinking, okay, we're in the value zone. We could maybe continue that move. How would we label this, by the way? What do you think, Thibault?
Well, you have the gap up, that will be a buying climax.
The gap
Then
up?
there is very,
Right.
yeah, so like all the way up. Yeah,
Well,
that
it
would be a climax.
looks more like, you know, we were talking about like hypodermic activity here, right? So it's hypodermic reversed, so like a V-shaped bottom.
Okay.
So, you know, this looks more like a sign of strength and then a backing up action and more like a minor sign of strength. So then if that's
Yeah.
the case, then this would be phase C. And then where is the stopping action? Probably somewhere here. This is a slightly different labeling, guys, that you usually would be accustomed to. So phase A and phase B here, then oversold into phase C, quick recovery into the value zone again, and then into the backing up action continuation. All right. So what do you think about the rally itself? Is it a better rally than we have had before? What do you think?
It's kind of a similar, a bit faster. There is big momentum, but it stopped about at resistance level.
Well, yeah, we're looking at the characteristics. So momentum has increased. It takes lesser time now to get to the same highs. Okay, what else?
And volume is much larger. We can see much larger volume than we had
very
before.
interesting. The volume
So there
is
is a lot of attention
much
into
larger
buying.
than before, and we kind of like the IPO volume is just large, you know, in it by itself. But here we see a definitive increase in the volume signature over the previous area, over the previous rally. So what does that mean?
Well, the institution are buying in. So we should expect
Institutions
a
are
higher price.
present, absolutely. And because we have a rally, what are they doing? Institutions are buyers. And are there a lot of buyers? Yes. There is an increase in their participation. Is there an urgency to get into this position?
Yes.
Yes, we see this from the increased momentum signature. Okay, great. So then it kind of tells us that maybe we're close to getting above, you know, the previous highs because there is some kind of urgency. Okay, what about the latest trading range that we have right here? What do you think about that?
Well, that would be a climax on the first one. That will have a test, possibly a C phase, and going to like a last point of support, going to backing up action.
Something like that.
Uh-huh.
So, would we be considering a position here at this point?
Yes.
Oh, when exactly?
I would probably would like to wait for the last point of support. Just wait for a little pullback. Because of you, yeah, we can see the volume is decreasing. So there may be a reaction there before resuming the up move.
Yeah. So I would say that anything, the break of this line right here, probably would just tell us that you know, we would be expecting to go into the position. By the way, guys, look at what kind of stock this is. From $25, it went to $75 in 2.5 months. So this is ×3. This is a high momentum stock. So once it breaks out, it's probably gonna, you know, run away from us. So we want to make sure that we are in the position. It looks like the volume signature is pretty bullish. I mean, look at this, all of these bars to the upside. There is no really a big reaction after the rally either, and it rests on the support of the first distributional formation that we had there. So it looks ready to go. But let's come back to this trade that we discussed before. So point of entry here, point of entry here. Those are going to be kind of like very risky probe type of trades. Those are not going to be your regular trades. Your regular trade is going to come here, here, maybe here. And you would be thinking your target zone somewhere here in this area. Going into this bar, you're going to be thinking that this is probably where we might be having some kind of stopping action. So a swing trader would get out somewhere here and on the way up, definitely on the change of character bar. The long-term trader is going to do nothing. There's going to be maybe an attempt to hedge, but the way how the momentum unfolded suggests that we're not going to have a prolonged reaccumulation or very deep reaccumulation. Okay, what else could we notice here? Change of character bar, well defined, suggests that, you know, we are done. We are done with this rally, and we are going to go at the minimum into the consolidation. You know, as Tibor has said, the diminishing volume characteristics suggesting continuation. Okay, let's see if it would get us into the position. So somewhere here at the open, we could get into the position throughout this whole day, on the breakout, at the close, even on the test. The test kind of gives us an idea that, you know, we probably could get into the position, but we would have to see what kind of momentum we are going to have here. Momentum diminishes, and we would be expecting the price to come probably to around this level, which it does. So, Thibaut, what are we going to do now?
That could be one. I mean, that could be one of my problems. Is that I'm usually very early to exit, and I don't sit on the trade to let it develop. So here, you know, I would see a climax. So I would be intended to exit and wait for the range, a new range to develop.
Okay. Yeah, so a new range, something like this. So we are probably what? Somewhere here, right?
Yes.
Somewhere here. So at least, you know, at the minimum, we want to have some kind of retest. So we could wait for the second low. Hopefully it's going to be a higher low, and we could come in somewhere on the higher low. We are definitely in the uptrend at this point of time. Where are we in the price cycle, Thibaut? What do you think?
I mean, we have the great momentum, so I would be expecting to start fading at some point.
Right, but where we are in the price cycle?
I mean, the trend is still up, so we're still in an uptrend. There is no sign of distribution yet, so I guess we have to wait and see how it develops.
Okay, so accumulation is segment number 1. Emergence of the trend is segment number 2. Uptrend, segment number 3. Change of character into the distribution 4. Distribution 5, 6, 7.
So
where are we?
That could be your number 4.
Number 4?
In number 4, possibly.
Okay, well, think about this. I mean, if we are at number 4, you're basically saying that we have concluded the whole price cycle, the markup of the price cycle, right? So, and think about the causality that we have. So what is the causality here?
No, we're still in an uptrend then.
We are still in the uptrend, yes, but the question is, how would you define the causality here? Where did accumulation
But
happen?
yes, in May we just had like the backing up action, so we should expect like higher pricing. Mm-hmm.
Right. So we really need to think about where we are in the price cycle to define, you know, what to do. So we're thinking we probably we're seeing accumulation on the way up, on the way up, on the way up. So all of this absorption there, on the way up, right here, on the way down, on the way up. So we're seeing a lot of the accumulation on the way up, and also in this formation right here. So this looks like, you know, a trading range. So this is the whole causality. So if we would be measuring, you know, the by P and F, this would be the count, this whole thing, and probably we would
Yes.
even consider, you know, the IPO. So for this type of the causality that lasts more than a year, let's say a year and a half, do you think that they're gonna get out of the position after
No.
6 months?
So would you call this like a major sign of strength and going to backing up
Yeah,
action?
probably if it's a major sign of strength. Yes, correct. So major sign of strength into the backing up action, and we probably still early on in the cycle itself. So then you, Thibaut, hopefully that will help you, you know, with the long-term positions, and you can stay there, you know, for some time if you could recognize that the causality was huge enough, and that the price still, you know, has not reached that target. Okay, well, let's see what happens next. We do have this higher low here, and this looks like a earnings gap right here. So we said that somewhere here, probably on this bar, you know, we could have that point of the entry. Yeah, and that looks like a really good point of entry for us right here because it's in the oversold condition. Okay, well, we are on the last bar. Thibaut, how would we interpret where we are?
It would be like a climax.
Yeah, looks like
and
a climax.
possibly entering a trading range or a small consolidation.
Okay, so take the position here. I mean, take the profit here.
Yeah, volume is still very strong. There is like no selling.
Yeah, there is no selling. So what does it mean?
There's no supply. It's continuing up.
Yeah, probably could be a continuation. If we're thinking about an oversold condition, whenever we have some kind of big gap or big bar spread that, you know, breaks to the upside, how do we judge what comes next? We usually look at the test. And what we want to see is both the price being able to stay at that level where the big bar finished. And then the second thing, we want to look at how much supply comes in. So in this case, there is a lot of effort to push the price down, but the result to the downside is limited. So this is bullish. Here, there is not that much supply as there was at the previous instance. So that suggests a continuation. Here, we're seeing that supply is also not as much as, let's say, in the first case, let's say right here. So we're expecting a continuation. Here, we don't have a lot of supply, but this demand is also not that great relative to the previous attempts to break out. And then the price kind of drifts down, and look how quickly it goes to the low of that bar. So that suggests that we are going to have some kind of reaction here. And here we're still holding, and supply is not that great it's actually the smallest supply on any type of situations like this that we have had. So this shows a lot of strength, and that suggests still, an immediate continuation. It's a very strange spot. I actually was right into this spot just recently, and I couldn't bring myself to buy in here. I couldn't bring myself to buy into the continuation, but there are some stocks where you have to have that faith in the momentum and the continuation, because next what happens is something like this. And then you still have a runaway market. And you go from, let's say, 130 to 175. So that's about, what, 25% return right there. So have to be really cognizant of how this happens, and maybe scale out here just 1/4 on what you think is a buying climax, and then allow the test to happen, and then just write the last one, with all of those last shares that you have. Okay, well, Thibaut, really quickly, we're at 5:30. So what do you think is happening now?
You can see the volume is starting coming and the spread coming down. So we might see, that's been a great up move. So we might start seeing some supply.
So
and I would be cautious after this.
How would we label this move to the downside?
Like a buying climax.
Okay, buying climax. Are we changing the character? And we are probably in some kind of automatic reaction here, something like this. So now look at this whole big picture. Here's your huge trading range. Here's your phase C. Here's your minor sign of strength, LPS, and then some major sign of strength, backing up action, but then another major sign of strength, just like such a huge move in such a short period of time. And this was the start of the end for this rally that lasted from about $25 to 175. Wow, what a move. Let's see what happens next.
Yeah.
Here's that reaction. So for those of you who recognize, who traded this stock, Rocco, one of my favorite momentum stocks right here, had a couple of trades here. We had a really good call here. I actually bought the stock right here, sold some on the way up right here into that same logic of the climactic action. The smallest portion was sold right here, but still not the greatest of the trades. And then obviously a very clear change of character, changes of character bars. And then I started rebuying the stock right here. So I'm currently in the position. I think that this is an opportunity. The way how I'm buying this is not speculative. I'm gonna hold on to this stock for a couple of years, maybe 3 years, maybe the cycle, depending on the market as well. So my idea here is that this is the stock that's going to be interesting stock for institutions. Look at how the volume is increasing. So they're still getting into the position. And this latest reaction to the downside is actually looking like a very interesting opportunity for them to get at $100 or close to that in the stock that has moved from 30 to 175 and showing such huge potential on how the business is going to unfold. All right, well, Thibaut, thank you so much.
Thank you very much. And I think the price cycle you explained, that's light up some ideas.
Okay, great. I'm glad to hear that. All right, guys. Let's just see, maybe last question. Between March and May. If we hypothesize that this is an accumulation in phase B, don't see high volume at the bottom of the trading range, that may provide evidence to my hypothesis, or is it because supply has been observed? So I'm unaware, somewhere here. We are definitely seeing a lot of buying in this area right here. This is just a period of inactivity with just, you know, some local spikes. We would be thinking here that, you know, this looks like an accumulation. So our trade here is going to be to the upside. We probably would be thinking of getting out somewhere here, and then just restarting the trade somewhere here, here, and then somewhere here. Okay, well, I don't know, Simon. Does this answer the question? Yep, okay, great. All right, guys, that's it for this class. Don't forget your homework, which is the bias game. Here it is. So for next class, we're going to go through that. And obviously, I want to know as to, you know, what are we going to do with the anatomy of the trade. So we have to think about that. And then at some point at the end of October, we're going to start talking about the process as well. So we're going to do this as a home assignment. We're going to establish the process, and you guys are going to, you know, bring me the homework on the selection. So that's going to be interesting. So that's going to be at the end of October. All right, guys, that's it for today. I will see you next Tuesday. Happy week. Thank you, guys. Bye-bye.